Good morning and welcome to the ADS Securities Markets Update. The first day of the week came in with few economic releases across the board. However, the volatility continued and the US dollar lost its Friday's gains again. As for the Asian session today, a collection of economic figures were released from New Zealand, Australia and China, which had a notable impact on the markets. Beginning with New Zealand, the manufacturing sales declined sharply by almost 2.8% in Q1 of this year compared to another decline of 1% in Q4 of last year, and this is the biggest quarterly decline since 2009 and the fourth quarterly decline in a row. In Australia, the NAB Business Confidence Index also advanced again towards 7 points in May, up from 3 in April, which is also the highest reading since August of last year. The ANZ Jobs Advertising Index also came in with a disappointment, or came in also unchanged in May after rising by 2.5% in April, which is also the weakest reading in almost 2 months. However, the home loans showed an unexpected rise, rising by 1% in April compared to a rise of 1.5% in March, while it had been anticipated to decline back toward or by 1.8%. In China, the inflation data also declined more than expected today, beginning with a year-over-year CPI. It slowed down toward 1.2% in May, down from 1.5% in April, while the estimates were to decline just toward 1.3% only, and this is the lowest reading since January of this year. The year-over-year PPI also stayed lower at minus 4.6%, despite the fact that the estimates were to come in around minus 4.5%. As for the European session ahead, we will be waiting for a few economic releases today, which are unlikely to have a notable impact on the market due to its minority. However, beginning with Switzerland, the unemployment rate is expected to remain stable at 3.3% in May. The month-over-month CPI, or the inflation data, will be in focus today. The month-over-month CPI is expected to rise by 0.1% in May after declining by 0.2%. However, the year-over-year CPI may decline again toward minus 1.3%, down from 1.1% during the same period, which would be the biggest decline on record. In the UK, we'll be waiting for the trade balance deficit today, which may also decline slightly toward, or narrowing toward, 10 billion pounds in April, down from 10.1 billion in March. Going forward to the US session today, also 3 minor economic figures will be released today, which may have also a slight impact on the market, especially unless if they come in with a surprise. Beginning with the NFIB Small Businesses Index, the estimates are to rise again toward 97.1 in May, up from 96.9 in April, which would be also the highest reading since February and the second monthly increase in a row. Also, the Jobs Opening Index is expected to increase again above the 5 million, toward 5.03 million in May, up from also 4.99 million in April, which would be also the highest in almost 2 months. And finally, the wholesale inventories may add around 0.2% in April compared to another increase of 0.1% in March, which would be again the biggest monthly increase in a row. Going into some technicals today, the US dollar index again, today, the US dollar lost its Friday's gains yesterday and today, as the index also failed to break above its 50 and above its 100, also 50 and 100 simple moving average on the 4-hour chart. Moreover, the index also retraced by almost 61.8% from the recent rally after or before declining on Monday. And in the meantime, when yesterday's move clears the way for further declines and to retest last week low, toward 94.65, which is likely to be broken as well due to the impulsive move to the downside. If so, another decline could be seen toward 93.13 in the coming weeks. Also, for the euro yesterday also recovered on Monday after declining following the US jobs report on Friday, and the euro advanced above the 1.13 overnight, reaching as high as 1.1330 so far. And this is after the pair also tested its 50-day also moving average, or simple moving average, on the 4-hour chart, and retraced also by 50% from the recent rally. Yesterday's recovery also suggests further gains ahead toward last week's high around 1380, but the key resistance remains at 1.14. As a break above that, the resistance may clear the way for further gains above 1.15. This is it for today. You can follow us on our social media sites, Twitter, Facebook and YouTube, to get the latest economic releases, reports and analysis. Thank you for watching. I'll see you once again tomorrow.